Welcome to Quick Bite, your fast and friendly Florida insurance update.
Hello. This is Roshonda, agency owner of the Isom Insurance Group here in the Sunshine State of Florida, back again with another Quick Bite episode, your fast and informative insurance market update. Today is Wednesday, February the 18th, 2026, hump day. And today's quick bite is not about rate filings, it's not about legislative votes, and it's not about market stabilization. Today, we are talking about something that impacts every single policyholder in the state: insurance fraud. And not just any fraud. We're talking about a $1.7 million inside job that happened inside the Florida Department of Financial Services, the very agency that is supposed to prevent fraud. Yes, you heard that correctly. The fox was guarding the hen house and apparently had a master key. Let's get into it. And let me just put a little disclaimer out there. I know insurance companies get a bad rep, like they don't want to pay claims and they just want to take all the money. So I really want to address some of the fraud cases that happen, that are real cases that kind of happen, and this is what makes insurance companies leery. So I know, again, insurance companies get a bad rap, like, oh, they're always trying to find a way not to pay claims. Not necessarily. So let's shine the light on the other side of the coin of some of the fraud that comes up. So on February 9th, 2026, officials announced what they are calling Operation Division of Risk Management. The total loss, approximately $1.7 million. The location, Tallahassee, Florida. The alleged ringleader, Brianna McCarthy, a former risk management specialist at the Florida Department of Financial Services. Now let's pause there for a moment. Her job was literally to process legitimate claims for property damage and vehicle accidents involving the state. She was not a random clerk. She had internal authority. She could approve claims. She could authorize payments. She could cut checks. And according to investigators, from 2021 to 2024, she did not just skim off the top. She allegedly ran a full-scale claim factory from her government desk. Over 220 fraudulent property damage claims were processed. Let that sink in. 220. This was not a one-time mistake. This was systematic. According to reports, McCarthy recruited 5 associates. 2 of them were also state employees at the Department of Business and Professional Regulation. The group allegedly submitted fake property damage and vehicle claims. The fraud was not sophisticated cybercrime. It was old school paper manipulation. Investigators later found that many of the so-called claimants did not even own registered vehicles. Some did not have valid driver's licenses. This gets worse. Registration paperwork had whiteout corrections, mismatched fonts, altered forms. And here is the part that almost sounds unbelievable. During a search of her desk, investigators reportedly found physical copies of falsified paperwork sitting there, not hidden in a secret vault, not encrypted, in her desk. That is the desk of secrets part of this story. Sometimes fraud is complex, sometimes fraud is lazy. This appears to have been both and careless at the same time. Multiple individuals were arrested. The alleged ringleader faces charges including grand theft, money laundering, forgery, and official misconduct. Others face grand theft and bank fraud charges. And here is the uncomfortable truth: this was not a private insurance company employee. This happened inside a state agency, inside the Division of Risk Management, inside the office that processes legit claims. Now, let's talk about why this is not just a dramatic headline. Fraud does not just hurt the system. Fraud raises costs. Every fraudulent dollar paid out becomes part of loss calculations. Loss calculations influence rate filings. Rate filings influence premiums. Whether you have auto insurance, home insurance, commercial insurance, or life insurance, fraud affects everyone indirectly. Nationally, the Coalition Against Insurance Fraud estimates that insurance fraud costs Americans more than $80 billion per year. That averages out to hundreds of dollars per household annually in hidden fraud tax. So when we see 1.7 million disappear in one internal scheme, that is not pocket change. That is part of the bigger math. The most striking part of this case is the irony. The Division of Risk Management exists to handle claims properly and prevent abuse. Yet one individual allegedly approved 220 fake claims over 3 years. That raises a difficult question. How did no one notice sooner? Internal controls are supposed to catch patterns. 200 claims is a pattern. Large payouts to repeated names is a pattern. Altered documentation is a pattern. This is why this case is being framed as a part of a broader crackdown. CFO Blasio has publicly emphasized a war on waste approach in 2026. His statement was direct. If you steal from Florida taxpayers, you will go to jail. Strong words. But strong words also come with strong expectations, because now the public is asking not only who did this, but how it was allowed to continue. Some people treat insurance fraud like a clever shortcut. They say things like, the insurance company can afford it. But here's what actually happens. Fraud increases claim frequency. Increased frequency increases actuarial risk. Actuarial risk increases premiums. Premiums affects affordability. Coverage rates affect market stability. It is a domino chain. And in Florida, where we have just come out of several difficult insurance years, stability is fragile. This kind of scandal does not help. Most insurance fraud stories involve stage accidents, inflated roof claims, fake slip and falls, or organized crime rings. This one is different. This was internal. This was someone with authority. This was someone trusted to safeguard taxpayer money. This is why it feels different. And this is why oversight conversations are heating up in Tallahassee. This case is unfolding at a time when the state is emphasizing accountability. Legislative session is focused on affiliate transparency, AI oversight, litigation financing disclosures, and now we see internal government fraud exposed. It adds pressure. When lawmakers talk about eliminating waste and stabilizing insurance markets, they now have to prove that discipline applies everywhere, not just to carriers, not just to trial attorneys, but internally too. You might be wondering how something like this finally gets caught. Fraud detection often starts with anomalies, unusual claim patterns, repeated payees, documentation inconsistencies, internal audits, whistleblower tips. Technology plays a role. Data analytics now flags irregular payment cycles. But here is the uncomfortable lesson. Fraud sometimes survives longer than we expect because trust exists. And when someone holds authority, others assume legitimacy. So, what can everyday policyholders take from this? First, transparency matters. Second, documentation matters. Third, oversight matters. If you ever file a legitimate claim, keep records. Communicate clearly. Understand your coverage. And recognize that fraud investigations, while necessary, can sometimes slow processes because agencies tighten reviews. The honest majority pays the price for the dishonest minority. That is the frustrating reality. Now, let me say this clearly. If you're going to commit fraud, do not keep your cheat sheets in your government desk. That is not advice, that is sarcasm. But it does highlight something. Most fraud collapses under carelessness. Greed gets comfortable, and comfortable fraudsters get sloppy, and sloppy fraudsters get caught. Does this one case change Florida's insurance rates tomorrow? No, but it reinforces why anti fraud initiatives exist, why underwriting is stricter, why documentation requirements increase, why claim reviews sometimes feel intense, because fraud exists and preventing it protects everyone long term. Operation Division of Risk Management is still unfolding. Charges have been filed. Court processes will continue. More details will likely emerge, but the takeaway today is simple. Fraud, whether internal or external, is expensive. Accountability is necessary. Oversight must be consistent, and stability in Florida's insurance market depends not just on laws, but on enforcement. Also, I like to put the caveat that everybody mentioned or talked about in this episode or is presumed innocent. I just know they've been charged according to my research, but they're innocent until proven guilty. If today's quick bite helped you understand how insurance fraud impacts the broader market, now's a great time to stay informed and proactive. If you would like to review your coverage or request a quote, please visit our website at www.isominsurancegroup.com, which is also below me on the screen. Preparation always beats reaction. If you found this episode helpful, please like this video, share with your friends and family, and drop a comment below with any topics you would like for me to discuss in any future episodes. And as always, please subscribe to the channel so you know when a new video drops. Quick Bite episodes drop Monday, Wednesday, and Friday at 2 p.m. Eastern. And remember, this video is for educational purposes only and should not be taken as legal, tax, or specific insurance advice. Please consult a licensed insurance professional about your unique situation. This is Roshonda with the Isom Insurance Group. Thank you for watching. I'll see you next time. Please stay safe out there. Bye.
Thank you for watching. Visit us at isominsurancegroup.com.